Well, the dollar and yen fell against most major currencies today. Investors turning their sights to currencies that typically benefit from global growth. Nick Bennenbroek, head of currency strategy at Wells Fargo Bank, joins us now with his perspective on the market. Nick, welcome back to Bloomberg News. Always good to see you.
Good afternoon.
So where are investors turning their attention right now?
Well, I think the Canadian dollar is popular today because they had a very strong jobs number out of Canada, and a lot of the emerging markets are doing extremely well, Asia and even some of the Eastern Europeans. But, you know, those commodity currencies, those emerging currencies are in favour.
Any surprises on the list there?
No, I don't think so. It's your typical culprits or your typical beneficiaries, shall we say, from positive risk appetites. Actually, if there were any surprises, it's the fact perhaps that the euro and the pound are doing quite well today.
Well, I want to turn to, you mentioned emerging markets. I want to turn to the yuan, the Chinese yuan, because there's been a lot of talk more recently. You just heard Paul Krugman saying that if you ended the peg, that economies around the world would be much better off. How close do you think we are to that peg not being in existence anymore?
Well, I don't think we're that far away, but we don't believe it's an imminent move. We don't think it's going to happen within the next month or so. Our own view is that the peg will break, or the Chinese will allow the currency to appreciate again from around about the middle of this year. And it's certainly coming. But at this point, I would have thought we would have seen perhaps a few more signals or a few more hints from some of the Chinese officials, for example. And we're not really seeing anything at this point. And the data is strong. The data is consistent with a change in the currency policy, but it's not so strong that it says it's got to happen within the next month.
Well, that's actually at odds with some of the other economists we've spoken to at some of the other large banks, Goldman Sachs, for example, saying it could happen in the next week even. So do you think that people are just way off when they're expecting it to happen that soon?
I think probably they are. I think that the data is not so strong to prompt an imminent move. I also think the next policy move, when we get it, won't be a currency move, but will probably be a domestic policy move. That is higher interest rates or an increase in this reserve requirement ratio, a move to take liquidity out of the market. I think we'll see that, and then we'll see the currency move after that.
Nick, speaking of liquidity in the market, with all signs pointing to the U.S. consumer coming back, what's that mean for emerging markets?
Well, I think that's going to be helpful in terms of sustaining the gains that we're seeing in some of these currencies. Clearly, the currencies that have done very well at the start of this have been the emerging currencies and the commodity currencies as well. I don't believe it's possible for the major U.S. economy and these emerging regions to decouple, to go their separate ways forever.
Why not?
Well, because I think the U.S. is still an important customer for a lot of these countries. And if we don't see U.S. consumers spending, if we don't see the products being purchased, then eventually at some point it's going to be very difficult, I think, for these economies to sustain their performance and for these currencies to sustain their gains. So the pickup in the consumer is going to be important for these emerging currencies to hold the levels they have now and to, in fact, keep moving higher.
I think a lot of people are asking the question when they're looking at the dollar right now is to how much longer can this run go? I mean, at some point, presumably the Greece problems will be resolved one way or another. Is that going to mean that the dollar's going to take a hit?
Well, it could take a hit in the very near term simply because sentiment has swung so far one way than the other. I actually think, and we think, that the dollar can keep rising for quite some period of time, depending on which currency you're looking at. And the euro's problems are more than just Greece, we believe. Certainly, if you look at the GDP growth performance, it's quite subdued at this point. The growth in the fourth quarter was slower than in the US, for example. And we are starting to see the first hints of a drop in confidence in Europe as well, again related to some of these problems. So if Greece disappears, it will help, but I still think the balance of economic performance is going to help the dollar over the euro, for example.
Well, speaking of that balance of performance, with Germany and with France saying that they would step up and they would help out Greece, how does that help Greece's economy going forward? We've had people on the air this week who have said, Professor Peter Marissi of University of Maryland said that one of the problems was that Greece wanted to blame speculators instead of looking in the mirror and saying, maybe we caused this problem by just spending too much and borrowing too much.
Well, I think having French or German assistance for Greece, for example, is certainly going to help in terms of maybe limiting the depth of the recession. But Greece has got a lot of work to do, clearly, with the 12% of GDP deficit. So they're going to have a pretty significant and sharp recession that will probably last perhaps even the better part of 2 years. So with or without help from Germany and France, I don't think the prospects, unfortunately, are that good for that particular economy.
I want to talk a little bit about Australia, because I know that's an area that you're looking to. But how is the Aussie going to do? I mean, because it is so commodity dependent, that nation. If the dollar continues to rally, I mean, what is that going to mean for commodities and then the Aussie dollar as a result as well?
Well, it's probably going to, at the margin, be a restraint on the Australian dollar. But until those interest rates here in the US, for example, start rising and some of the liquidity gets removed, I think the Australian dollar can at least hold its levels right here and maybe even move up towards the 95-cent level around about the middle. If we saw a very strong dollar, I think that'll stop the Australian dollar from, a very strong US dollar, that'll stop the Australian dollar from advancing. But we would still think it'll be one of the stronger performers.
Do you think that policies that Prime Minister Rudd has in place right now are going to do just that?
In terms of
strengthening the Aussie dollar?
I think they seem to be sensible policies. I mean, they had fiscal expansion that's perhaps coming out a little bit now, but the growth outlook is good for the Australian dollar. I see no particular reason for a sharp decline at this point. And again, I do believe that the Australian dollar is going to be one of the outperformers against the major currencies, at least.
Nick Bennenbroek, head of currency strategy at Wells Fargo, joining us on set. It's always good to see you. Thank you so much. We appreciate it.